What's going on, you guys? My name is Shiraz Ahmed, and in today's video I'll be sharing a couple of my top tax tips that we've actually used to help some of our Canadian clients save some money come tax time. So stay tuned. Okay, welcome back, you guys. Today we're going to be talking everything to do with tax, and more importantly, some strategies that we've used for some of our more prominent clients that you actually may be able to implement yourself come tax time and ideally help you save some money. And because I'm a licensed professional, I do need to give my obligatory disclaimer. Now, I'm not a CPA, and any of the things that we're talking about today regarding tax, if you're curious to see whether or not they're applicable in your scenario, I would encourage you to seek out qualified tax counsel. That way you can verify to see if any of these strategies do make sense for your individual circumstance. Okay, now that that's out of the way, let's get into the strategy overall. So there's a big misconception that you need to have millions of dollars in your portfolio to use some of these strategies. But as tax is actually percentage based, the more you have, the more you spend, the more opportunities there typically are to save if you actually know where to look. So the first tip I'm going to give is to look into writing off your investment management fee. Did you know that the fees that you pay for investment advice on non-registered or non-retirement accounts are actually tax deductible? That means that if your marginal tax rate is, say, 50%, you'll effectively save half of your fee for service. Now, another simple step you can take is directing the fees outside of your TFSA and RSP, and also where appropriate. For the TFSA fees, if you have money available, it's almost always a better idea to pay for those fees from your non-registered account or even from your bank account from savings and or income. The reason is that we want to leave as much money as possible in the account where we get that tax advantage. If we reduce the TFSA by, say, $250 in the form of a fee, that's $250 that we lose a tax advantage status on. Alternatively, if we pay that $250 from outside of the TFSA, we're squeezing every tax dollar possible back that you can. The fee itself is not tax deductible, but you'll effectively be paying less tax on the income earned on that $250 by having that money stay inside the TFSA rather than in the non-registered account. Okay, for RRSP accounts, it's not so simple. You may assume that paying the fee from outside of the RRSP account leaves more money in the account to grow tax deferred, and yes, it technically does. The other factor that needs to be taken into consideration is that the money in the RRSP is essentially pre-tax dollars. Since you get a deduction when you put the money in, with an RRSP, the government defers collecting tax on the funds while you invest in your RRSP until a later time when you ultimately start to withdraw on those funds. If you pay the $100 fee from inside of the RRSP, you'll never withdraw that $100. So the government never gets 30% tax on that $100, and therefore the CRA essentially shares in paying for your fee. There is a break-even point in which that you would actually be better off to keep more money in the RRSP to take advantage of the tax-deferred growth, but this can take decades, and there's no guarantee what your rate of return or tax rate will be in the future. So there's no reliable way to really calculate this break-even point. So that's why we generally recommend paying the fees from inside of the RRSP account, but not the same way with the TFSA. So another tip that you can use is to look into planning RRSP contributions. RRSPs can be one of the most powerful tools in your toolbox that a Canadian ultimately has to help minimize their tax burden. But that can actually sometimes do more harm than good if it's misused. The idea behind an RRSP is that you put money into it in your high income years and then slowly withdraw from it during retirement when ideally your tax rate is lower. Now, generally, it's a good idea to use any unused RRSP room that you have, of course, if you can. Considering, however, that you're expecting, let's say, a large bonus in a year or two, or perhaps you're currently in medical school and working part-time, or you're in, frankly, just a lower income today than what you would expect your future income to be and ultimately taxes in the future. In some cases like this, it can actually be better to hold off on those RRSP contributions, choosing to instead save them for the future when the tax deductions will actually be much more valuable to you. Now, another tip is to look at the coordination of your tax and financial professionals. Now, this is an important yet obvious one that I think not enough people frankly take advantage of. It's always encouraged for your professional advisors, whether that be tax, financial, or even legal counsel, to be coordinated and ultimately working together. There are strategies around coordinating withdrawals or dividends from personal holding companies, or even when to do something as simple as tax loss selling, or when to look at crystallizing some of your capital gains. Basically, when your professionals know how to play in the sandbox together, it almost always ends up being a better outcome for you. So to summarize, there are some super effective yet straightforward strategies that you can use to possibly save some money come tax time. It may seem counterintuitive, but at certain points, tax savings can actually become more valuable than increasing, let's say, the rate of return on your portfolio. Any money that's saved in taxes can actually be considered to be a relatively risk-free return. Now, I'd love to hear from you guys on some of the best tax tips that you've received or are using on your own portfolios. I'll drop my contact information at the end of this video. If you appreciate the content that I'm creating, please consider hitting that like and subscribe button. And of course, that bell icon will notify you the next time I upload another piece of content. Until next time, stay safe out there, everybody. All the best. Bye for now.